everyone know. And let me get that going while I so give me one moment while that live stream gets set up. All right, I think we are live, and let me reshare my screen. So once again, welcome. And now it's the topic of the hour. And it's befitting that, of course, Women's History Month is ending today. It's March, and we thought no better time to talk about wealth than now. And we're really fortunate to have Deep Paknikar. I think very rarely do you meet somebody who wears so many different hats and is accomplished in all of them. So Deep, we are so excited you're here, and I want to introduce and give you a sense of her background. So she is an entrepreneur, speaker, and investor. She's got a master's in computer science and an MBA, and has worked in Fortune 500 companies like Microsoft and Amazon as a software engineer. She is also a licensed real estate agent in Washington, and she runs a company that provides education for investors and helps them invest in real estate in multiple states in the US. It's called investorina.com. I hope I pronounced this right. She's a biggest supporter of women. She's very passionate about helping them be financially independent and emotionally healthy. And you'll learn a little bit more about why that is. And that's why she runs a number of programs to help women find mentors and community support for career and personal support. In fact, she's a mentor for VR Pistachio as well in our mentoring program. Now, if all of this was not enough, she also runs a company that supports women-owned businesses in developing countries. It sells natural products and is into sustainable products, and that's called highersensibilitycompany.com. So Deep, we are really excited and grateful that you are here to talk about this important topic. Oops, and I'm going to hand it over to you. Thank you again, and over to you.
Thank you, Aditi. I'm going to start sharing my screen. Are you all able to hear me well? Yes?
Yes.
Yeah. Okay, great. So hello, everyone. This is Coffee Plus Conversation. So I hope you all have your coffee with you and you're ready to go. It says Friday. It's Wednesday, but yeah, let's make it feel like a Friday. So how to create wealth when you don't have a job? So I'm Deep Paknikar, your friend and guide on this journey towards financial independence. A little bit about me. I'm a mom of a naughty 9-year-old and been married for 15 years, moved to Seattle 15 years ago. Master's in computer science MBA, worked at Microsoft, Amazon. I've been investing for the past 10 years in real estate and across multiple states. And right now I'm also a real estate agent in Washington, helping home buyers, sellers, and investors. My inspiration. Now, this is what drives me. This is where all the strength comes from. So I'm being inspired by my maternal grandmother. She was extremely hardworking and she had limited opportunities in that day and age, back then in the 1940s, 50s. And she raised a family of 3 all by herself. She fell through some hard times and she just rose through it and raised 3 kids. So very strong women. And based on all of that, I really feel, I truly believe this, that women have the power to make the world better. And if we were taking care of their financial security and their emotional health, they would have more of their energy to give towards making the world a better place. And this is where my drive comes from. I want to help them be financially secure, emotionally healthy, so they can then come out and help make the world a better place. So a quick disclaimer, the opinions I'm expressing here are solely mine and do not represent any other person or country. Sorry, company. Okay, let's do a quick poll. So what are your financial fears? And Aditi, if you can run the poll for us.
Yeah, just give me 1 second. All right, it's launching now. We're almost 50% folks have voted. We'll give it 30 more seconds. All right, I am going to end the poll in.
Okay.
So let
So
me.
I see a lot of retirements, unexpected events in life. Very true. I like it that you all have, some of you at least, have selected self-care. Very important. Kids' education, of course, caring for aging parents. Thank you so much. Okay. So let me close that. One second. Let me just go back. We talked about the poll. Let's get started again. Okay. So let's start from the basics of wealth building. What are the basic blocks? So very basic is assets and liabilities. What are assets? Assets is a resource with value which provide future benefits. So asset, simply spoken, asset is something that will put money in your pocket now or in the future. So it could be something like real estate property or stocks, which when you sell, you can pocket the profits. Liability. So this is the money you owe to somebody. So liability pulls money out of your pocket. Now, what is net worth and doing investment? So net worth is the value of an asset a person owns minus the liabilities. So basically what you own and what puts money in your pocket versus minus what puts money out of your pocket. So what remains in your pocket really is your net worth. And what is an investment? An investment is an asset purchased with the expectation of future income or appreciation. So for example, you buy a primary home, you have expectation that it will appreciate in the future. You can call that as your asset. Now, which of the following are liabilities? So let's run another poll. Note that I'm calling primary home loan, right? Not just the primary home. So let's quickly run a poll here. Which of these is liabilities? Yep. That is good. All of the above is the correct answer, but you can choose anyone and it would be correct. Thank you. So we see that if you observe here, the primary home loan, car loans, credit card bills, taxes, these are everyday things, right? Every year you have to do your taxes. You have to pay your credit card bills every month, car loans, primary home mortgage payments. So you see so many things that we have in our life are liabilities. Okay, so where does net worth matter? So we spoke about net worth is assets minus liabilities. Why does it matter? So it's, many of you know, the more the net worth, the more money you have available for use. And this money is available for your expenses, education, recreation, etc. And net worth can be increased by increasing assets and reducing liabilities of both. Now, this is a critical point we are going to go by, right? So net worth, assets minus liabilities, assets increase or liabilities decrease or both, and your net worth goes up. So let's talk about this. Net worth, of course, translates into money for retirement, etc. So let's talk about how we can reduce these liabilities. So the entire premise of investing is really to sort of balance out these two aspects and make sure your assets go up and your liabilities go down. So reduce liabilities. So one way to do is you optimize your loans. So if you have a primary loan or loan on your secondary home, you take loans which have lower rates or which have better terms, and that could help reduce your liability. So the monthly outflow that you have going via mortgage, that can be reduced. Reducing taxes. This is another big one. We pay anywhere from 25 to 35% taxes on income, and on capital gains we have 15 to 20% tax. So the tax rates is really high, and tax is a liability. It takes money out of your pocket. So if you were to reduce that tax burden, and there are many ways to do that, that's for an advanced event, that will reduce your liability. Also, budget for purchases. Lot of times when we have a credit card, it doesn't seem like money going out of our pocket like how it does back home in our home country sometimes, which is, to when we pay cash, we feel that the money is going out of our pocket. But with a credit card, that feeling isn't there, so we end up spending much more. And similarly, on online sites like Amazon, where you have one click payment, it sometimes doesn't really feel that you're purchasing, and you end up spending much more than you expected to. So by sticking to a budget, it really helps reduce your liabilities by reducing those credit card bills. And then shop around for the best deals. So the other liabilities are home insurance, car insurance, etc. Then shop around, try to find the best deals you can, so that reduces the insurance and loan liabilities. Now, how do we increase the assets? This is the other side. So by increasing income, of course, that's a common one. But apart from that, you can do multiple kinds of investments, which is stocks, mutual funds, real estate, etc. And this is the third one, is something that you should think about, is making smart buying decisions. When you buy anything, think whether it's an asset or whether it's a liability. So when you buy a car is a liability because as soon as it comes out of a dealership, it reduces in price, and it's when you sell it, it's going to go for a lower price than you purchased it for. So there's a net loss there. And the second part there is that you are maybe paying loans on this car, right? So you pay additional to what you purchased it for. So think about, do I need this level of a car? Do I need a luxury car? Think about what you need and buy something that fits to these needs. Now, some people may love sports cars, and some of you may love sports cars and want to indulge in it, which is by all means, I would say do that. But think about what are the areas that you want to indulge in and budget for that. And the rest, try to save money there, right? So this is a better way to reduce the liability and then increase the assets by making smart buying decisions. So what are the risks to net worth? So definitely very easy to say, increase assets, reduce liability. And to do that, you can do multiple things as we talked about. But what are the risks? Like, let's say I were to do an investment to increase my assets. What happens? What is the risk to that investment? And every investment potentially comes with some degree of risk. So one big risk is inflation. And what inflation is that really the value of money going down over time. So think about to your childhood. You went and bought a loaf of bread. What did that cost you? That cost you, let's say, some money. Now, today, if you were to buy that same loaf of bread, you can tell me, I mean, pretty much I'm certain all of you that the amount it's going to cost you in your currency is going to be much higher. And so now the same good is costing you more than it used to. And that is what is called inflation, which is the value of money going down. So this is a risk because we don't know at what rate this money is going to go down. So let's say yesterday the bread was what $1. If today it's 100, that's a huge shift. So now suddenly your $100 is not worth so much. So this rate is unknown sometimes. There is an average, but it varies, the inflation. The tax rate changes. How much you're going to be taxed at? Today it's going to be, let's say, 15 to 20%. Tomorrow a new government comes in, they change the tax rate. It can go up to 40%. That's very unexpected. Unexpected expenses. There could be family emergencies that come up where you have to spend, and the market conditions and external factors, which are completely out of your control. So these are the risks to the assets and investments. Now, how do you account for this risk, right? So definitely our working age is limited. We say we can probably work 18 to 65, and that's kind of like a time when we maximize as a family our income. But what happens after that age, after the retirement age, which many of you have brought up as a concern. So how do I account for that kind of a risk? Now, life insurance and other types of insurances are a way to say that, oh, if something unexpected happens, I have insurance coverage. Very similar to how you have health insurance, there is life insurance, and there are multiple other investment vehicles that go with life insurance. And that we can perhaps talk at other event, but this is a way to account for that risk, something unexpected happening. Reduce taxes or invest tax deferred. So of course, like we talked about, reduce taxes. There are multiple ways to be able to do it, which are taking deductions. And also there is something where you can invest your money after tax. And when you take it out at retirement, it's going to be tax free. And why is that an advantage? Because now, independent of what the interest rate is going to be at the time you retire, sorry, the tax rate, you have now deferred it. You basically can pull out your money tax free at the time that you retire. Balancing your investments. So this is a super critical one. It's almost, this is the same as saying don't put your eggs in one basket, right? So you want to have investments which are geographically distributed. So maybe invest some back in your home country, invest some here. Also different asset types. So you could do stocks, you could do real estate, you could do maybe some gold. So it's kind of like mixed across the board. That way it assures that if one thing goes down, there is always something else where you still have your assets protected. And invest in resilient assets. What do I mean by that? Some assets are very volatile, right? So for example, super high growth stocks where the company is new, it's a startup, it may go anywhere from there. It may become the next Facebook, or it may go into non-existence. So those are very high risk assets, high risk investments. So the resilient ones are which weather the market conditions. I mean, of course, real estate is one of them. There are few others like mutual funds, etc. So investing. Now, this is a point which often I like to bring up, and it's very close to my heart, is money is not the only thing that we invest. We invest our time, we invest our effort. And it's not just in a financial thing that we invest. We also invest in ourselves, our families, relationship, community, and health. And what this is basically is think about the same analogy of assets versus liabilities. Assets is something which puts money in your pocket. So investing in health is which puts health into you in some sense, right? Which improves your health. And the liabilities which decreases your health. For example, if you exercise regularly, it's an investment towards your health. If you are totally stressed and drink a lot of alcohol, it may be a liability for you and it reduces your health. So think about these factors as well as you think about investing. Okay, so this is going to be like an exercise that you can do at your own pace. I'm just calling it out here. Check with 5 people from your friends and family list and ask them what type of personal investments have they done? What is the financial investments they have done? Do they have any plans for retirement? Would they like to partner with you to learn more? So this is a way to network with the people around you and find out what are their ways to invest. And maybe you can learn something from that. Okay, so this is kind of the core point in this event is I don't have a job. Can I invest? So my answer is a resounding yes, yes, yes. Because money is not the only aspect of investing. There are other aspects, and that combined with money give you good investments. So the top tips I would say in this case is learn and gain knowledge on the subject. So you all have been super proactive coming here to learn about investing and just getting the financial knowledge. So that's the first starting point. Then network with others and look for partners. A lot of the things we do as human beings is not by ourselves. We really partner with people, build teams, and then together do things which is greater than a sum of its individual parts. So that comes from networking to finding out the kind of people who also would like to learn with you, who would also like to invest with you maybe in the future. Then third is connect with experts on the subject. Since many of you would take up jobs and would have 9 to 5 jobs, it's really hard in terms of a time investment to then put a lot of your time towards investing. So in that case, work with experts, financial experts, and experts in stock, real estate experts, etc. Insurance experts is another one, to really avail of what they know and use that knowledge towards the growth of your assets. So you're not reinventing the wheel again and again. And find the initial capital. So obviously, like if you want to invest, there is an initial capital requirements, but there are many ways to do so. There is your own savings. Maybe you had a job back home and now you have come here, but you do have the savings from that. Or you could have your family savings. You could have freelance income. There is a lot of freelance work available, website developers to proofreaders to technical writers, or family inheritance. So whichever way you generate initial capital. Also do note that you can always partner with others and pool in your money to do investments. And that's a good way to start as well. Okay, let's run another poll. Would you like to learn more about investing?
The votes are steadily coming, Deep. So we're
Okay,
almost 60%, 70% voted. Would we maybe give
well,
it
that's
30
good.
seconds?
Yeah, that's really good. Okay, so yeah, I think looks like the top one is all of the above and the other ones are right too. Okay, nobody's saying I'm not have time or interest. So thank you for that. Yeah, and this is totally up to interest as well. I totally understand some people may not be into it. Thank you so much. Okay, so I think that's pretty much it. I sort of covered the basic set of what it means in terms of financially to know how much assets you have versus liability, what is your net worth, and then what you can do to increase those assets and reduce those liabilities. And now I'll take questions. So thank you all for attending, and thank you, Dipali, Aditi, Isha, for giving me this opportunity. So I'll take questions and then leave you with my contact information. So yeah, anybody questions?
Yeah, well, thank you, Deep. So again, this is coffee and conversation. So like Deep said, there's a lot of this topic is an ocean, so we covered basic information. So go ahead and ask questions if you want to raise your hand. Deep, do you want to stop sharing so that we can see um,
Yep.
your group? So yeah, go ahead and either just raise your hand and then we'll call on you to ask a question.
Comments, feedbacks, anything, suggestions?
All right. So I have two. So we have a question from Kavita on which is actually my question too. How do we find more information on real estate investing? It's a hot market, and you said it's a resilient investment too. So can you tell us about that?
Yes, of course. Like definitely, I have my site investorina.com, which I want to actually uh, put forward as a learning tool, especially for women, because this is an area really close to my heart to make women financially independent. So definitely sign on to that, and we'll be sending more information and having more podcast in the future. So you'll get information on all that. Apart from that, there are a lot of networking groups. So go to meetup.com. You'll find a bunch of networking groups that are there. Find the ones that speaks closest to your heart and then join it, attend it once and see how you like it. And also there's online lot of information in terms of the groups available as well as just the content wise. And there are different forums. Bigger Pockets is one, and there are a few other forums. And I can help, I can share it with all of you through email once we send a follow-up email, and use those forums. Like just go there, hang out, learn from what people are writing, find out about investment. So definitely those are very, very good options.
Great, thank you. Um, then I have one question, which is, let me pull that up. If you had, it's a very interesting question from Betsy. If you had $100 to invest today in this market, where would you invest, or what's the first place you would go for information or resources?
Okay. So I mean, $100. There are lots of places to invest. You could just invest in, mutual funds, but the returns are low. And I think this is something I would love to cover in another of such events, is something called leverage, right? So the what leverage is using that $1 to increase your leverage and maybe use it as worth $100 or more money. And you all must be familiar with this, because when you do your primary homes or something, you get a loan. And what a loan essentially is leverage, where you put only 20% down and you finance the rest 80%. So basically, the 80% amount is not your own money. It's the bank's money, right? You pay monthly on it, but it's the bank's money. So what you've essentially done is you have used your $20 now and leveraged it up to $100. So this is where a lot of the ways to invest this $100 comes from, where you can use this $100 and leverage it up to $500 and then rotate that money. So this is one of the things I would love to do, is leverage that money. Also, there are other vehicles to use the same amount for investing, and that's perhaps a bigger topic for another time. But leverage. So my point there is, think about how you can leverage your money to do investments.
So what would you recommend as far as doing that? Like I have investments both in real estate and in the stock market, but I'm just curious, like being as experienced as you are, I'm just kind of watching things happen, and sometimes I really win and sometimes I really lose. So I'm just curious, like where do you go when you're like in the morning, you're like, okay, I have it. Like, let's say you got a raise at your work, or you got a bonus at the end of the year and you have an extra couple $1,000s to invest. What would you do with that money immediately today?
Yeah. So one thing to note is it also, I would say, depends is also a good answer, because risk tolerance is a very important factor. For example, somebody could use that $100 to buy, let's say, um, fidget spinners. You could maybe like go to China and they have manufactured in Alibaba.com, buy like maybe 1,000 fidget spinners with that money and come sell it for $1 each. So now you've got your $100 to $1,000. That could be one. But is your risk tolerance that much, right? What if none of them sell? So then you can go to lower risk factors like stocks. You could do high growth stocks. Today you put in $100. Tomorrow it's going to become 500 because it's a super high growing stock. But it may be equally volatile. So is that the right investment for you? Maybe not. Then you may go to a mutual fund where you put $100 and you may make like 8-10% on it per year, and then it slowly increases. That would be another option. So I think the question is, you may have this extra chunk of money, but something to think about is how much is in your risk tolerance and how much effort and volatility can you take on that amount. And then based on that, you can do a bunch of different investments. So what do you feel like is your risk tolerance? Do you think you can do fidget spinners, or would you like to do really safe investments?
I feel like I'm somewhere in between. Like I think I have like, I kind of look at it as, let's say I have $100 to lose, but I also have other savings in other places. So I'm financially stable, but just, I don't know how to make the most out of that money. I mean, ideally I would do a fidget spinner, but I don't know. I don't have the knowledge to think of choosing a fidget spinner. Like I don't even know what my options are. And so I would just go onto my institution and say, okay, well, that one looks good, but I just have no idea.
So that's a very good point. I think you bring up a very critical point, and that critical point is knowledge makes a difference, right? Like let's say today you knew fidget spinners could sell well, you could potentially do that. So this is definitely an important aspect. It's not just money, it's also knowledge, and that makes a big difference. So in this case, I would say not having that information, high growth stocks would be a good option that you could do. There are also many other ways to leverage, but those are a little bit complex topics. But yeah, that would be my answer. Definitely a potential option to have it invested in a high growth business.
Cool. And then can I just add one more part to my question? So is there something that you read every single day, or a book that you've read that was really like got you to this point? Or like, what is the resource where is the fountain of information that you take from?
Okay, yeah, that's a good question. So I don't know if you have heard of this book, Rich Dad, Poor Dad, which I think is like a very sort of like classic book for investors. I'm going to put it in the chat, by Robert Kiyosaki, and this is a fabulous book to read. That's what really got me started when I came here to the USA. And this has been a very like a mind shift, if you will, for me in terms of what I thought about investments. So really good book. And in terms of, I would say, specifically for our group, right? As women, we tend to be very giving and taking care of everybody around us before we take care of ourselves. So very critical aspect I feel is self-care. And this is almost like putting on your own oxygen mask before you put oxygen mask on somebody else. So when you do that level of self-care, everyday affirmations, everyday self-care, maybe it's exercise, maybe it's healthy food, maybe getting enough rest, that makes a difference to how you would then come out in the world and perform in terms of either investing, your job, or anything else that you do outside, right? So I always want to advocate for that. And I hope that helps, these talks help women do the same for themselves.
Right. Thanks. We have three more questions, and I'm going to go to them in the order. So Sanyukta wants to know, what is your personal investment philosophy, Deep, and do you recommend diversifying widely or just investing in what you know?
Okay. So there are certain investment principles that you should follow, and that is the diversification aspect. And this diversification aspect can be in a certain category of asset types, right? So as by asset types, I mean stocks versus real estate versus other types of assets, businesses maybe. But if you think about it deeply, that you have to think that the ones that I called out, right, the market forces, the risk that comes with it. So each asset class, if you study this, there's online lot of information available about it, comes with its own set of risk and features. And it is for you to really think through and figure out what sort of fits your risk profile. So some people do not want to take any risk. For example, Betsy says $100 I have extra. I'm okay to lose it all, but I'm also, I want to make, if I do make money, a lot of money on it. Right. So there's that one risk profile. And then there is another one, which is like, no, I would just keep it in the bank and I just want to beat inflation. So to kind of get a happy medium, I would recommend that it's best to have your assets spread out to different asset categories, as well as within that asset category among different types. So for example, if it's stocks, it's like value stocks, growth stocks, etc. And if it is real estate, you could have different real estate asset classes such as single family, multifamily, maybe some commercial, and so on. So it's that mix that gives you some degree of resilience, because everything doesn't really go down at the same time. And that is dividing your risk between multiple baskets.
So Deep, we have a question from our Facebook Live audience. So Sonali, who's from UK, wants to know, would you consider a wealth manager who has a view across various investment options?
Yeah, definitely. Like I said, leverage the experts, right? I always advocate this. And the reason being that they have gained knowledge over a number of years that makes them suitable to find out the right things that fit your needs. And to gain that knowledge by yourself would take a long time, right? So always leverage experts. And if you feel that's a good match in terms of compatibility, you're comfortable with the expert, then please, by all means, go ahead and leverage their knowledge.
Great. So we have lots of questions, which is great. So Kavita has a question: what are your views on stock trading? So there are two questions on stock, and I'm going to kind of bubble them up. So what are your views on stock trading, and then how do you determine high growth stock?
Yeah, so I mean, this is something that definitely is like a more complex topic to talk like beyond the scope of this in some sense. But in terms of stock trading, you have to remember that stock is the risk is very much dependent on the underlying company and the fundamentals. So it's very important that you familiarize yourself with what the stock market entails in general, and then specifically for the company or the domain that you are working in. For example, we say certain categories of stocks like petroleum stocks, or online, the internet stocks are another one, medical is another one. Each kind of stock has a different profile in terms of risk to results, right? Risk to gains. So very important to familiarize it with different kind of stocks. And in terms of growth stocks, you'll see specifically the growth stocks are like high growth companies which potential to expanding markets and increasing the going up in value. I mean, I'm not a financial advisor, so I would say go to a financial advisor. But one example is the internet stocks. So a lot of these internet companies, e-commerce companies have good potential in terms of high growth. So I would recommend there two things. Number one, familiarize yourself with the stock market and particularly the domain of stocks that you're dealing with. And number two is leverage an expert. So a financial advisor would be a best person to go to.
Okay. I have a follow-up question. So if somebody who wants to start familiarizing with the stock market, like somebody asked a book, what's a good place to start for somebody who knows nothing?
Right. So, I mean, there's online lots of books. Motley Fool was one that I had referred to, which gives a lot of the basics, and then you can graduate from there. Also, if you want to do stock trading, there are a lot of certifications that are available, and you might want to get those certifications. So, you not just that familiarizes yourself to familiarize yourself with what it means to do this trading. Also, it provides you a sort of license to be able to trade, and also gives you benefit of additionally helping others once you have those licenses. So there are multiple licenses that come from SEC that you can use to leverage those to do stocks and also this day trading, etc.
Awesome, thank you. So we have a question from Pratiti on what percentage of your money should be in investments versus liquid cash, and in that, how much should be stock versus real estate versus other options?
Yeah, so this is, I mean, of course, you should go to a financial advisor to get the right mix. And this, as I mentioned before, it is very much dependent on your risk tolerance profile. For example, a millennial with no family, by themselves, they may be okay taking a high risk, right, at that stage in their life. But as you grow older, you may not be able to take so much risk. So it's very much dependent on your individual profile. And in general, I mean, I can say about savings that the general advice is keep 6 months, 3 months to 6 months of your expenses in a bank account. But beyond that, it's just inflation is eating away into it. So this is just one tip. But really speaking, I think the question is that it depends on what your own risk profile and place in life is, right? So that's what I would say, go to a financial advisor to get the best breakdown for that.
Deep, we have another question from our Facebook Live audience. And Shri Chaparla wants to know that as a beginner, would you recommend a certain amount that you should start with?
So there's not like a certain amount. Once you decide that this is kind of the category that I'm going to start with, it may be stocks, it may be mutual funds, it may be real estate. Usually the market determines there's a certain amount that you would need in order to invest. For example, stocks, you could do penny stocks, which would just take pennies. Or if you were to do blue chip companies, then like maybe IT companies or more established companies, you need a bigger amount to invest. Similarly, within real estate, based on the location that you go for, there may be a minimal amount that you need to invest. If it's like a high very expensive area like San Francisco or even Seattle for that matter, your initial investment will be much higher. If it's like more of a lower price point areas such as the Midwest states, then you may need a lower price point. You can get in at the lower price point. So I think it depends. Once you decide what sort of investments you're familiar with, you're comfortable with, works for your family, then you can decide what that minimal investment looks like. So there is no like a number specific. I would say it just depends on the conditions.
Got it. So what kind, we have a question from Aishwarya, keeping in mind we are a global community of relocating spouses. What kind of investments do you suggest for people who move around countries?
Yeah, that's a very good question. So a lot of countries, and it depends on individual countries' rules and tax treaties with other countries, do allow you to invest. So for example, I have investors who invest from India and other countries. So there are certain rules and restrictions which you need to really consult a legal entity or a lawyer to make sure that you are doing it in the right possible manner, and also a tax CPA to make sure that the taxes are taken care of. But apart from that, there is based on the country's treaty, you can pretty much invest any place that you go. Actually, it's a good opportunity. You go to a new place, you find that the real estate is doing great, invest there. Tomorrow you move somewhere, that is going to be an asset now. And as long as you make sure that the taxes are paid as the country requires you to, you should be good investing other places as well.
Great. We're going to take two last questions. because we're almost out of time, and I think we should have scheduled more. But what are the things to keep? Okay, I lost the question. What are the things? This is from Shri. What are the things to keep in mind before investing in real estate outside the state? And how do you manage the property being far away?
Yeah. So this is a good question. So usually when you're outside, when you're investing outside, you could invest for certain specific things. For example, as I mentioned, Midwest states have a lower entry point for investing. So that could be your thing, or the returns, how you're getting, or the appreciation may be different. So based on that, you choose a location and you invest there. Now you have to be very particular that when you are not at the location, you need a trustworthy network to be able to really invest there. And what that network means is a trustworthy broker, a trustworthy property manager, your lender, etc. So this is kind of your team. So when you invest outside, it's not by yourself, it's with a team. And the first thing you need to do is make sure you have that team, or go to an expert who has that team already, and then decide on what property you wants to invest in. Once you do that, then you leverage this team to take care of all you need to do in order to get that property. So your lender is going to get your loan done, and then once the lender part is done, then you have your first the broker and then the lender, and then you keep a property management. So my property so far that I have done, I've leveraged property managers, and these property managers have come to me as referrals, and that's how it has turned out to be good property managers, because that referral has come through a known party that I networked with. I knew them, they gave me referrals, and that's how I had relationship built with these people. So I would say create that team and then go for investments outside of the state.
Great advice. And you spoke a lot about choosing and working with experts. So we have a question on, sorry, what you should look for when choosing a financial advisor.
Yes, I think a financial advice is a critical piece. One of the things definitely is your comfort level. So do interview a few, see if you're comfortable or not. I've heard of people, they chose a financial advisor because somebody told them, and it was just hard to work in person with that financial advice. So definitely very important that you're compatible. Other factor to think about is what are the incentives. So like a lot of them work on per transaction basis, some work with flat fees. So that's also very important, because based on their incentives, that is how they are going to be making their money. So they will be having a tendency to give advice based on their incentives. So this is a very critical piece. And the third and all, check their credentials. I mean, a lot of these have credentials in terms of recommendations online, recommendation from friends and family, and also in terms of their credentials. So they have to take certain certifications in order to qualify to be a financial advisor. So look for all of those and then put this together to determine who should be a financial advisor.
Wonderful, thank you. And like I said, there are more questions coming in, but we'll wrap up, and then if you have time or if somebody wants, we'll kind of extend. I just want to thank you, Deep, for just coming and starting this conversation. Deepali and I are very passionate about putting the control in the hands of women, and we're so lucky that you came and share that passion with us and are doing this. And it's hard to be financially independent in a new country when you may or may not have a job. So thank you for kickstarting this series, and thank you to all of you who joined in, right, to take this time staying on and asking questions. Deep said that self-care is another form of investing in your own health, and we heard her loud and clear. So our next session is on April 23rd, where we're going to talk about how you can make yoga easy for beginners. We have an expert, Vinita, who is an Iyengar yoga instructor, and she will be leading segments. And Isha's dropping the event in the chat. And of course, our promise is that no relocating spouses ever alone. As Deep said, we always need a team to invest in each other, and that's what We Are Pistachio does. So join our Facebook group, connect with us. Lots of our team members are here. and connect, learn, and grow. And I'm going to stop sharing and stop recording. So